This is the part 2 of our video, so please I recommend that you watch part 1. In part 1 we found the our cash generated from operating activity between 495, and that's what we are going to use for our second working. So B part of the question says that cash flow statement. We are finding the cash flow statement for the year ended 31st May, that's 05/2015. As I told you in accounting, you underline it nicely because that one is also going to score you points. So you put a CD sign here, that's 3 zeros, we underline. We'll bring our other CD sign here, we underline beautifully. Now in cash flow, the first thing that we look at is the operating activities. Another operating activity, the first thing we are going to consider is the cash generated from the operating activity, which we found in the first video. So cash generated from operating activities. So if you recall, we had 495. Then we go to dividend paid. The dividend paid, we also use the previous year, the 70 Ghana, but this time around we'll subtract from our operating activity because we've paid for the dividend, so we subtract. Then we'll go to interest paid. The interest the question gave was 5, so we also subtract. Anything we are subtracting from the operating activity. Then we go to tax paid. So tax paid, the tax paid in the question, we use the current year, the amount they paid, which is 20,000. So we subtract 20 from it. So we subtract 70 plus 5 plus 20 from 495, and we are going to get 400. So this is a net cash flow from operating activities. So the next thing we are going to find investment activities. Another investment activity we are looking for the purchase all the purchases of non-current assets. So we go here to the non-current assets, that's an investment activity. So the first thing that we have is what? Purchase of what? Building. So purchase of what? Building. The building, we are going to find the difference between the current year and the previous year. So the difference is 950 minus 900, which will give us 50. Then go to the next item, which is equipment. So equipment is 900 and 700. So 900 minus 700, which will give us 200. Then the last one is purchase of what? Vehicle. And the vehicles, we have 300 minus 250, which will give us 50. So when we sum 50 plus 200 plus 50, we get 300. So you know that this money, this has been consumed, so it's in minus. So the last thing that we are going to look at are financing activity. How we are going to get money to do the financing activity. So under this, we look for issue of shares. So we come here to our shares column. It says that when you look at the revenue, capital and revenue, you see that the shares for 2015 was 1,005 and the shares for the previous year was 1,000. So you subtract 1,005 from 1,000, you are going to get 5. That's also in arrears. Then we look out for repayment of loan. There's a dash here. This indicates that the current year, that's 2015, we didn't borrow, so we repaid our loan of 100, which is also in brackets. So we are going to sum 300 plus 5 plus 100, and we'll subtract from here. So 300 plus 5 plus 100 will give us 405. 405 deducted from 400, you have a minus of 500. But let's look at something. Over here we have an overdraft. So that means this is our money, the money we are owing. But we have an overdraft. That means we are given ability to withdraw more than what we have. So we had an overdraft of 220. So 220. So this one is minus 5 plus 20, which will give us 15. This is what we call cash and cash equivalence. Earlier on, I told you that the figure that we are going to get for the cash and cash equivalent should always equal to our bank and cash balance, which is 15. So I've been able to prove to you that our calculation is so. In any time you do a cash flow statement, make sure that the cash and cash equivalent is always equal to the bank and cash balance. So we'll end there. Then I'll urge you to watch our other subsequent videos, which we are going to talk about other subjects. So thank you, and see you in our next video.